They are similar, but there is one big difference that makes the story different.
Any failure to do so, I think, can lead
Yes.
to actually, destroy the entire process.
I don't know if you heard about provisioning.
Hello everyone, welcome to the Domain Podium. Our today's guest, Mr. Saeed Alblooshi, is a fintech entrepreneur and a banking influencer. With the decades of experience in the core banking system, he is a keynote speaker and he's also a host of one of the YouTube channel called Discover Saeed. With his decades of experience, he has been providing the consulting to many corporates and banks in the Middle East region. Thank you so much, Saeed, for joining us today. And it's truly a privilege to have you here. Welcome on the show.
Thank you so much, Ramesh. What a nice introduction. I am very happy to be with you here and explore and give more things to the fan or to the viewers of your channel.
Yeah, absolutely. And truly, an honor to have you here. I remember our discussion in the past, and we have been discussing about the core banking system and the loan restructuring. I know that you are indeed an SME of the loan restructuring, and you have been providing the consulting to the various banks in the Middle East region, particularly in UAE. So I would be really, willing to know that what's the fundamental of loan restructuring, because I'm particularly from a card and payment domain where I work in the credit card processing system. So I know the nuances of how credit card works and the credit card industry works, be it issuing or acquiring. But this topic of loan restructuring is a completely new and a brand new topic, not only for me, I believe for my audience as well. So it would be really great to know your opinions, your perspective, and your experience in this industry. And how does this loan restructuring work? What are the basic fundamentals that behind the processing of a loan restructuring process when somebody initiates it, be it a bank or a borrower? Okay, so what do you think, like, if you can help us understand what is loan restructuring and how does it work?
Thank you so much, Ramesh, again. And loan restructuring. Loan restructuring, actually, most of the loan restructuring started after the financial crisis 2008. If you remember the situation, there was a bank, some banks went out of the market because of the securities. So the loan restructuring is debt problem.
Okay.
For example, Ramesh, you will come to the bank and you want to build a big building, hotel, a commercial or corporate. For example, you say to the bank, I'm going to take 50 million. The bank will check everything for your financial, your history, your background, your security. At a certain point, they will give you the loan, 50 million. And you are going to pay regularly for a few months, 1 year. But at a certain point, you say, I don't have money now. The market is down. The real estate is down. Everything is down. How I'm going to pay? So you are going to be in default.
Oh.
So after, for example, you don't have money, you don't have anything. After 90 days, past due, this loan, which was initiated by the coverage or relationship management, will transfer. There is a team in the risk or credit, it depends on the bank. They transfer this one to make a new restructuring to solve the default of the borrower.
Okay. And as a consulting firm, so what's your role in facilitating this loan workout or restructuring process for a bank or for a borrower? Like, who does generally initiates this process? Is it a borrower who initiates or a bank who initiates the process?
Yes, Ramesh, that's really a good question. First of all, everyone has to know when the client is in default, the bank is losing so much money. You tell me how? I don't know if you heard about provisioning.
Yeah, provisioning.
Yes, for every loan there is a provision. When the client defaults, the bank, from where it takes the provision, you think? From its profit.
Okay.
For example, if there is a categories, 90 days, 100 days, 1 month, everything, it depends how much provisioning is going to take. For example, 90 days, the bank will take 25%
Okay.
of the total exposure. For example, the loan is 10 million, will take 25%, 2.5 million.
Okay.
And from the profit, there is interest and suspense also. And instead of the profit or interest going, it's incurring every day and to incurring in the other account from the profit of the bank.
Okay.
So that's why, good question. I told you the bank will start the process of restructuring.
Oh, okay. So it's the bank who initiates.
Yes.
Okay, but
Mostly the
bank
bank.
initiates.
Mostly the bank. Of the borrower is we say, okay, I'm in default. I'm not going to pay. It's okay for me. But the bank, to avoid any losses to its balance sheet and income statement, needs to start the process as soon as possible.
And you said that generally the corporates, those who take the loan, and it could be a big amount, like in millions, like 50, 100 millions, like that. Is that a process is also applicable to an individual with a smaller amount rather than, a bigger amount, like in the millions for a company? So is that possible that someone like an individual who just takes a couple of hundred of thousands or maybe, loan from a bank, he may also become a defaulter, right? May not be able to pay. And then once an individual becomes a defaulter, so can he also initiate or reach out to any consulting firm to initiate the process of loan restructuring or loan workout?
Yes, loan restructuring is basically not only for corporate, for commercial, for individual people. It depends the financial, because the bank will give a loan for anyone. We'll look the history, we'll look the detail, the security, the equity, the money. So everything, it's already like included in the process. And if you tell me after what is the process for individual and how can he initiate the process, is that your question again?
Yeah, exactly. As an individual, okay, how can I approach in case if I need help from a consulting firm? What is that process an individual can
Yes, that's great. That will be after dealing, for example, for the restructuring, dealing there will be the process of restructuring. For example, the bank, once the default and the client is willing to restructure, there will be a term sheet, something called new terms. So the old terms now are not applicable because the client is in default. There will be a new term sheets before signing the documentation. So in this term sheet, we'll discuss every details about the financial. For example, yes, in every individual and the bank, there will be someone to support, financial Deloitte or I don't want to call names, but big financial institution to support. For example, for projection, the bank wants to know, to test the financial, test of the history. They will hire a big financial to do a projection and the historical. And this one thing. The other thing also valuation for the security, testing the security, because of course when there is a loan there should be a security. It depends, cash margin or a mortgage or whatever. So they test the security by valuer, approve the valuation to approve. So this is the most of the financial, like the help coming from other financial sectors.
when someone becomes a defaulter, of course you are breaking up your relationship with the bank, right?
Yeah.
Now bank is willing to depend on an external consultant to restore this relationship, right? So my question here is like, why would a bank want to depend on an external consultant in this kind of scenario? Why can't a bank have a team? Okay, for example, I'll just talk about that later as well. Like collection is a term in the credit card industry, right? Many of the banks, they have their own collection team. Similarly, in this kind of scenario, is that a case like bank doesn't even have a loan restructuring team? Or is there any particular reason why would a bank want to depend on the external agencies or consulting firm?
I'll tell you something, Ramesh. When there is a loan restructure, for example, corporate, someone is paying more than 50 million, 100 million, a loss is huge for the bank. So they want to make sure this loan is not going to default again.
Okay.
This the main things the people, of course, they for financial sector there is a categories, there is a rating for every company. So the bank, for example, 100 million or 50 million dirham, they will not ask for any financial company to do the projection or the analysis for the borrower.
Okay.
They will choose and help with the client to take the best company to do the financial things, the projection, the historical, the analysis. So you mentioned about credit card or something. Maybe it's bunch of the amount is less.
Generally, yes. That in credit card you don't have millions of fund transfer. It's a credit card. Of course, you have VIP card and VVIP cards, where you issues a higher credit limit, but that the percentage is really low. Okay, but I think that's a valid point, because there's a huge amount of money involved and the fund movement is involved, and that's why bank wanted to take all the precautions which are possible. And what do you think about the borrower here? Okay, because I understand the story behind the bank side of the story. Okay, and what a bank would be thinking and what kind of challenges they would be facing as a borrower. Okay, if some companies, some corporates, okay, they initiates the process of loan restructuring, what are the challenges they may face in this process? Because they have to prepare themselves. There must be some checklist where a borrower can self-certify themselves and then be 100% sure when they are starting this process, okay, and there will be a positive outcome of this entire process once they apply for it. So what are those challenges that a borrower should be prepared in advance?
See, if they come, it's usually the bank, as I told you, goes to the client to restructure. Okay.
Yeah.
If there is, let me ask you a question. If there is no restructuring, if the client is not coming, is not willing, there is a challenges faced by the client to do the restructuring, the case will go immediately to legal.
Okay.
So the client now has no option. Either goes to, usually 80% of cases going to the legal. It's from the bank, because they are prepared with the documentation, with the things. But if the client is not adhering to the terms, to the proposal from the bank, the legal action may be taken.
Okay.
So this one, the first challenges, the most challenges that the borrower has in restructuring process.
So he has to make sure that he's just on the boundary of bank going against him legally. So he has to bear that in mind, that there's potentially there can be a scenario that there can be a legal case.
Yes.
So are there any other challenges, any other factors that
for the borrower, for example, it's all about the negotiating. For example, The borrower say, "Oh, I don't have any cash. I don't have a money. How I can borrow? How can I do a restructuring? How can I sign a new agreements with you?" So the borrower, maybe the client can help, as I told, because the bank can help. Bank is losing so much, so the bank will be flexible with the client, unless they have a bank has a coverage to cover the loss. If there is no coverage of loss, the bank will be willing, like, okay, the borrower will say, okay, I don't have money now, what can you do? Maybe the bank will test the interest rate to reduce. It's negotiation. The bank will extend the tenor. But based on the borrower maybe provide additional securities. So it's all about negotiation. That's the most important thing for the borrower to avoid challenges is to not go against the bank. Okay, to get good relationship, so you have nice deal with the bank.
I see. And as a consulting firm, strategically, are there any set of rules or procedures that you may employ to ensure that this entire process of loan restructuring will produce a positive outcome?
Yes, it's not about only bank. Do you know when there is a restructuring, when there is default, there is a central bank will come to check and audit every cases, not only one time, sometime every quarter. To give an update. What did you do? Did you take more provision? Did you cover this loss? What are you going to do? Restructuring. There is documents, annual review process, operation thing are in place. So it's not only about the banks. There are other things could make interest of the bank to restructure the accounts.
But technically, I'm just trying to understand that piece because, like, as a consulting firm, what will be the role of that consulting firm? But do you have a strategy already in place? Like, these are the steps that you're going to follow. Step 1, you'll try this way. Step 2, or are there any workflows for a consulting firm that you follow?
The first, there is no like specific workflows to follow. It depends all about the negotiation. But of course, the most important thing is the security. The first thing, it's not be a more security. There are many things. There is a collateral. There is personal guarantee. There is, in case of corporate finance, there is LCs, for example, to make sure. So the first thing, the first criteria for every bank is the security. Strong security. Then, if there is advance payment, you say, okay, you are defaulted, for example, 20 million. Okay, at least you cover the interest past due. You've settled the past due, and then we can negotiate the restructuring. And then documentation. Yes, who are the other? It's part of the security guarantors who are willing to sign with you, or personal guarantee, corporate guarantee. You give everything. So these are the main two things: the security and the funds in advance.
So, Mr. Saeed, understand a core principle of loan restructuring, and I believe that transparency and communication, effective communication, will play a vital role, right, in fostering and restoring that relationship. Correct?
Yes.
So, what's your opinion on this one? Like, how does this transparency between the borrower and the consultant who is facilitating this process and the bank is important.
You are absolutely 100% right about transparency between both the bank and the borrower. Because some of the borrowers, instead or avoiding going to legal, would try to make stories, make things are not true in order just to get the restructuring. But after a few months, when they are like agreed to sign the agreement, the borrower can find excuse or trying to change the terms and this one, so we know the interest of any clients. So the transparency from the beginning, if you are not willing or you have some doubt, the bank can help you, because as I said before, the bank is losing, wants to help, want to save the balance sheet of the income statement. So transparency is really important, and the bank can help you. Also from the bank side, should be transparent. If there is no transparency, the deal will be failed 100%.
I get it. Both the side, transparency is a must, and any failure to do so, I think, can lead to actually destroy the entire process.
Yes.
Okay. And Mr. Saeed, I was just asking you about the credit card and all. I wanted to bring that topic up, okay, because my expertise in that area, right? So I always try to correlate things, okay, from the knowledge that I have gained to the perspective that what someone else knows. So for that reason, I just wanted to touch base that angle, that aspect of credit card as well. Because in credit card, when someone fails to make a payment or for their due amount on time, then the delinquency process gets started, right? So there are different delinquency status like levels, like 1, 2, or 3, and there is a point when the account is moved, the credit card account is completely moved to the collection status, right? So something similar would have happened in case of when a borrower is actually failed to repay the loan, correct? So are there any similarities or differences between these two scenarios? One is typically in a core banking loan system, other one is in the credit card where the customer is getting going in a default, right? From a perspective of that, the rules and regulations, what rules and regulations says for this scenario and that scenario? Are there any similarities or differences?
They are similar, but there is one big difference that makes the story different, which is the exposure amount.
Only that one.
If there is a big exposure amount, for example, it should be everything specific. Documentation is strong. Documentation for every client is different than the other. Maybe for credit card, you have template of agreement or something, you just find the application and sign. That one, no. That one, maybe you hire external lawyer also to do the documentation. The security are really different. So why I'm saying the difference is only because the exposure amount. When the exposure amount, there are other process.
Okay.
For example, when there is a default or something between credit card, there is a collection agency will do the same process for every client.
Something similar.
Something,
process, yes,
but
exactly.
for restructuring, it's completely different.
It's different.
It's negotiation.
Come
negotiate, come sign agree in the term sheet. Let's make the agreement. Let's get help from all the departments, get help from all other financial institution. And one more thing about the process, when there is a restructuring, it's the board or the committee can give an approval. Not like a credit card or just application or so. No, you have to take a specific from the high management committee to process with every restructuring agreement.
Fundamentally, yes. So both the things are completely different, I guess. Yes, you're right. So one of my favorite thing again, from a regulatory perspective and the compliance perspective, okay, are there any impact, like how these regulations from the central banks, okay, make an impact to the consulting firm, okay, because these are regulated bodies, right?
Yes.
So what's the role of those compliance and regulations to this consulting firm specifically, and how does maybe that impact to the process of loan restructuring? So
yes, they are really making a big role in restructuring.
okay.
They are monitoring everything about restructuring. There is no loss, because when the bank losses can affect the economic,
True.
right? Bank, there is no money in the bank, and this one part of the economic. So that's why the central bank, the government, can monitor also the loans, not only the bank by themselves.
Okay.
So the regularity and compliance is really important. And the one big thing with successful restructuring is when you solve the problems and the provisioning you put aside just to cover any losses in case. Once the account is regular, you take all the profit to the bank income.
Oh.
So when the bank announced, for example, the financial results of any bank at the end of the year or every quarter, the bank made this million from the corporate side, it's also calculated by the releasing of provision and interest expense.
Okay. Mr. Saeed, we did talk about the compliance part of it. We did talk about maybe some parameters and the strategic approach that a consultant may take. Okay. Now coming on to the bank side. Okay. Of course, because bank is willing to initiate this process, they don't want to lose money. They don't want to lose interest. Correct. But in some cases, because these are huge deals,
Yes.
it's the millions of dollars are involved, right? So are there any cases when a bank is ready to give any discount to the borrower just to restore this relationship and move it back to the original state?
Yes, of course. There are many cases happen where the bank gave discount to a borrower.
Oh.
The borrower is, for example, okay, because as I told you, in the provisioning price, there is a categories. 25 from the profit of the exposure, we'll take from the bank profit to cover. There is a 50%. There is 100, imagine 100% of the exposures are really covered by provisioning.
Okay.
For example, there is a case is past due since long time and the client is not willing, and the cases has been in the legal for a long time, but there is no decision made.
Oh.
Okay, the bank, okay. There is other solution when we can think. So, for example, why we don't give a discount for the bank, and this will motivate the clients to pay.
Okay.
It's all about the how it's
understand.
restricted. Okay, for example, give 5 million. Even if he pays 2 million, this 2 million already covered the provisioning, but will go direct to the profit.
I get it. And since a lot of money is involved,
Yes.
okay, are there any cases when the exposure of this, the loan lies with multiple banks?
Yes.
So, like rather than only one-to-one relationship between a borrower and a bank, maybe there is a one-to-many relationship.
Yes.
So, are there any cases like that as well?
Yes, of course. It's called syndicated loan. For example, multiple banks participating in one borrower, in one account. Why you think yourself, why you tell yourself why there are so much banks are participating in one loan?
Yeah.
It's just to reduce the risk.
Risk.
Because, for example, when the exposure is so high, 1 billion dirham, 2 billion, 10 billion dirham sometime, give some portion percentage, like 20% from this bank, 20% with this one. And in case if there are many banks, 10 banks, there will be agency bank agents. The bank or the borrower pays agency fee, will manage all the process with the other banks. There will be a committee, COCOM they call it, and based on this, 5 banks, the main exposure, they have main exposure, they deal and everything. When there is a terms or agreement, they inform other banks. This one part of syndicated, but it's a lot of fees involved here. Costly documentation, costly agencies involved in this one, but it's particularly for huge billions or hundreds of millions.
And then the role of consulting firm is also very crucial.
Yes, of course.
Okay. So before we conclude this, our discussion, Mr. Saeed, just last request, if you can give any particular message to our audience, because you are a keynote speaker as well, and you are a host of your own YouTube channel. I've seen your YouTube channel, and any particular message based on your entrepreneur experience and journey so far, or your journey as a consultant, for the bankers, particularly for loan structure. Any message that you want to give to our audience?
So one thing about public speaking or speaking in YouTube channel, in camera, or in front of thousands of people, hundreds, tens of people, it's one thing. It's to not fear.
Yeah, exactly.
Avoid being judged from other people or fear.
Absolutely.
It's all about the progress. From one time, you will not be a best speaker. You will not be a great speaker. You will not. It's all about the progress.
Yeah.
And if you compare yourself with the other person, you are going to fail. Only you have to compare yourself from the same person who was 1 year or last week or 1 week before. Here you can see the progress and without any fear. That's really important thing in every speaker. Every speaker at once was a disaster.
Exactly. Yeah.
Every speaker at once was disaster, but they kept going and going. Exactly. Every time they improve.
What a beautiful thought, and thank you so much. I guess our audience should learn from you. The last piece was so beautifully crafted, I think, from your side. I really like that, and to an extent, I think every individual needs that. Every individual has to speak at any front, maybe to a bunch of people, or maybe on a stage, maybe in a meeting, maybe in front of maybe a large audience. So you never know the situation is. So every time you start from zero, and that's how you keep on growing. If there's no fear of failing, or there's no feeling of comparing yourself with others.
True. Sometimes, Ramesh, sometimes it's not comfortable.
Yeah,
but it's growing.
It's growing, yeah. At the end, you just you committed something to deliver, and then you deliver.
Yes,
that's more important.
Courage.
Yes.
What does courage mean? Is you have a fear, but you still doing it.
Exactly.
Even if you have a fear.
Yeah. Thank you, Mr. Saeed. I think that was a fantastic discussion. I personally learned about this something new for me, because I told you, right. And I'm sure that our audience would have also learned a lot of things today about the loan restructuring, and also about your confidence, how to speak publicly. Okay, so thank you so much for joining us, for your valuable time, and it was truly an honor and pleasure having you here, sir. Thank you so much.
Thank you so much, Ramesh, for having me in your channel, and I wish you all the best. You are doing so great. Thank you.
Thank you so much, everyone, for watching the video. I hope you enjoyed and learned a lot of things today. And please stay safe and stay connected for the next podcast. Thank you. Bye.